Pretty cool stories. So you guys just stick around and listen. So 1 second and Buena will be on. Buena, you're on.
Hey Alex, so just want to first say thank you a lot for letting me on your show. I think it's a great privilege, especially to know a trainer like you, you're 12, and that's some strength. But I just want to first say thank you for letting me be on the Strategic Trading Radio.
Oh yeah, Buena, it's awesome to have you on. Uh, so you started trading when you were 14, right?
Correct. I started trading when I was 14, around the middle parts of my 14th year.
All right, that's pretty cool actually. So you've been trading for almost 2 years now, right?
I'm nearing my second trading birthday, correct?
Yeah. So you got into FX almost immediately. So what attracted you to FX specifically versus stocks or options or futures?
Okay, so if I can just elaborate on the story I got into trading, it was very innocent when it started. I pretty much was just browsing a few TV channels, and I stumbled upon the occasional CNBC and Bloomberg, and at one point I wondered what this was all about, and I began this sort of snowball of research and continuous curiosity in the market and financial instruments. And one of the first I came upon was currencies. And I found it interesting that currencies were tradable instruments back then, because the only thing I knew back then was stocks, and I had so much limited knowledge of financial markets back then. And, there was a lot of ads going on about forex trading online. There was a lot of hype about it. So yeah, you can see I got into that pretty much because of a lot of the media coverage, I guess, on FX, especially online. So yeah, that's why I came into FX, and exploring FX a little more after that. The flexibility of forex trading is just it's amazing. I guess it's why I chose FX over stocks, over futures, over options for now. And if you take a look at the liquidity, I mean, what the figures are at 4 trillion a day. That's like the basic statistic everyone's talking about. Back in 2010, banks trade FX, companies and corporates have large transactions going on. Retail is, well, it's a small part of FX, but speculations is going on in FX, large scale hedging. So all this liquidity and the volume and volatility, it's all contributing to how interesting I find FX and the 24-hour market quality in it. Stocks only open for 8 hours, and being able to trade 24 hours, switching aligning your lifestyle into whatever fits you best most, instead of, being stuck on, you got to trade in these hours for stocks, for example. And that's pretty much it. And you can also add leverage to there. I mean, FX leverage is very, very flexible. I think U.S. regulation puts it at 150. International is about 1 to 400. Obviously, leverage is the two-edged sword, but with low capital requirements, you're able to trade. I think that's the biggest thing that makes FX FX.
Yeah, well, it's pretty much the same with options. Like you have time limits with options of the stock market hours, but there's very little capital required to do an options trade, and you can do different things with them. So now I'm an options and stock trader, and when I do stocks, I do pairs. So I have my own opinions of how the markets are, but I'm not really gonna say a whole lot about that. But like, why didn't you move into other products? Like for me, I don't want to just trade one or the other. You have to trade almost both, or I want to move into futures. But why only FX and a of us options traders really need the S&P to go down. But with forex, I'm like with a 24-hour market. Does it like disturb your sleep cycles? Because for me, I mean, it would be kind of odd to be up at night, like trading some instrument. For me, that would be kind of weird. And also,
So, with me, I guess it's. I mean, I live in a pretty awesome time zone. Pretty awesome time zone. GMT plus 8 right now. I used to trade GMT plus 7. But this side of the world, right where I'm at, so you're looking at Indonesia, Hong Kong, Thailand, Philippines, and some part of Russia as well. This is, in my opinion, the best place, time zone wise, to trade FX. If you trade it, diligently and in a disciplined manner, you should not be disturbing your sleep cycle for the most part. You can trade the Asian session, that's about, normal time, at 7 a.m. to about 12 in the afternoon. The Asian session and the London session will be my afternoon, and then US session will be my nighttime, and there's nothing bad about that. And, if you see good opportunities early on, and, if you're done, then you're done. I mean, if you're making a decent profit, let's say, on the Asian European session, you can really be done for the whole day. And if you see nothing then, maybe you can wait for the US session. It's the flexibility that I like. But I have some disturbances to my sleep cycle. When trading was more of an addiction to me early on, that was definitely detrimental to my health and detrimental to my lifestyle. I mean, sleeping at 5, 6 a.m. Believe it or not. If you're diligent about trading, like at the moment of this recording, we're gonna have the FOMC in 2 a.m. my time. That's a simple sacrifice I can make. That's fine. I'm probably like I stay up till 2:30 and then I can go to sleep. Okay, but when you get too much into something, when you don't have a balance, that becomes dangerous, right? So that's what happened to me several times, a lot of times back then. I used to sleep with my computer next to me and my laptop, and that's just bad. I used to sleep with the light on, that's not healthy. These sorts of things kind of spiral down to a bad lifestyle. Going back to your other question or another point that you mentioned about the options market, right? You said volatility was low, right?
yep.
If you take a look at the FX, you're seeing a very low volatile market as well at the same time. So it's definitely kind of going to be cautious in terms of, especially in trading frequency. I mean, a volatile market is my dream place to play, basically. I mean, a low volatile market, you got to be really careful and conservative. So, yeah, I definitely agree with you on that. Market's definitely just dead right now. It's summer, and right now it's event week. Yeah, definitely, it's definitely quite weak, but just gotta stay ahead of the game, stay conservative, and trade.
Yeah, I agree with that. And what I do to deal with it is I just try to stay smaller with
Definitely,
my
yeah.
positions. My positions are just way smaller. I trade the same amount because, like, to make the numbers work, for me, I need to. So I have like between 15 and 30 positions on, with probably the average around 20. But I just trade a whole lot smaller. So, you have to be careful.
Yeah, for me, I guess in a low volatile market environment, I would still be using the same sort of risk setting. I won't really be changing contract sizes or anything. Sorry, risk sizes. Since contract size is variable to how much percentage risk you're taking per trade. But one thing I do try to manage is manage my frequency. So I really need to get picky on my trades when I see volatility dropping, and I need to stick with them. The longer let's say, if you're just holding a trade that's not really doing anything, it's better than, let's say, losing a trade and trading too much, over trading. That's definitely a bane of
days, depending on the trade. But we
definitely much longer term than me. I mean,
yeah.
that's 20 to 50 times longer than me.
Yeah, yeah. So, looking at like your story here, like we never really talked about your trading approach. Like, what do you look at? Like, I don't really care a whole lot about everybody's different market opinions, but when you trade, what do you tend to look at?
so deal with the sound. Okay, welcome back to Strategic Trading Radio Live. We are going on a quick commercial break after this interview. I hope you enjoyed it. The interview will be recorded in the archives as well as the last segment, but the first segment was not recorded. We're still working everything out in the studios, and I'm pretty new at this, so cut me a little slack, please. But again, don't worry about it. We're gonna go on a quick break. Alright, welcome back to Strategic Trading Radio. We just got off with a 16-year-old Forex trader. He lives in Indonesia, so we couldn't have it on live, but we did play the recording. So, again, everything's stored in the archives if you missed it, but really do check it out. It really is quite awesome. So, this is the segment where I go through some of the stocks or different strategies I'm looking at to actually trade. In the middle segment, I either have an interview or my future segment, and then this will be the last segment of the show. Right now, I'm only looking at just a few options trades. So again, for now, I'll only be options trades, but sometimes I look at futures pairs, stock pairs, futures naked, which I wouldn't recommend doing necessarily, or just plain old stock. But right now, just a few options trades, a few options possibilities. Right now for you, I'm going to talk about JCPenney, Apple, Q's, UNG, and Silver. And it's going to take a longer period of time than you might think, guys, because the way this thing works is that I'm going to go through the option strategies, go through the specifics. So I'm going to go ahead and switch back to my other screen. Okay, so here we're going to talk about a few trades we're going to do. Let me just bring this up. Again, if you guys were listening earlier, I was doing my rant on the VIX. So, I'm going to move away from profit charts, but you know what? I might as well just stick with profit charts. If I can get it adjusted, maybe I can, maybe I can't. So, I'm just going to use profit charts for the sake of promoting Tim Knight, the founder of Profit Charts. He's also on Tasty Trade, so if you're interested in technical analysis, and options trading, they have a lot of stuff on Tasty Trade that you can check out. So again, check out Strategic Trading Radio, which is my show. Please watch it, and then check out Tasty Trade, technical analysis, strategic options trading, statistical based trading. It's a really awesome show, and you should definitely check it out. So I'm going to go down to a 1-year time frame, and then we'll talk about a few stocks. Okay, first thing we're going to look at is JCPenney. JCPenney is just, regular retailer, but it was down about 10% yesterday, and today it was down 2.06. So obviously this is a trade candidate for some sort of options trade. We're in the 71th percentile in volatility, and we have lots of stuff going for it. Again, the chart would look really nice, guys, for technical traders, but to me it looks really good. It looks like something I want to mess with because of the implied volatility. So again, there's room for bearish or bullish positions. I'm just going to look from my perspective now, which is it makes much more sense to start buying this thing into this down move. And if I look here, I'm going to want to switch this to a candlestick chart. Right now we are on, and I'm not too familiar with profit charts, so just bear with me. I want to switch over to a candlestick. So let's see if I can get candlestick up. Preferences. Okay, theme, classic, salt. Alright, so it looks like we're just going to have to, these are color bars, so hopefully this works for us. Alright, I'm now going to go down 6 months in time. So again, we fell hard today. Alright, so we felt hard. So let's look into some option strategies. Alright, so we can't do August, 14 days to expiry. You ignore the weeklies because those are pretty much for earnings trades. But looking in here, take a look. So we're getting at 135.14 now of the month, which is pretty good. So I'm gonna look at these 63-cent options. The 12 September 49 days to expiry puts, trading for about 64 cents. You can get them for 64 cents. There's a 68% probability of profit. So that means it's going to stay. There's a 68% chance it's going to stay there. So what you do is you just go on the platform, you go sell, single, put. So you end up right here. So we're selling one September 12 JCPenney put for 63 cents. Your max loss is $1,200, which is, you're thinking now, well, that's dangerous. There's lots of risk. Yes, but it makes sense. For one reason, you can have a high probability of success, and you have a good return on capital, so which means you're going to get paid 1% a day for the capital you actually have to put up in the trade, and over time, if you sell volatility this way, you start making money. It's historically proven. I don't have the stats right here with me, but I just want to let you guys know, if you're worried about it, it is historically proven that selling puts in high implied volatility works. And again, just if you don't realize, selling puts is a bullish position. You want the stock to stay up. So I'm going to ask you guys, does it make more sense to buy 100 shares of this stock at $14.28 and put up $1,428, or $121 and have your break even at $11.37? So you make $63 to buy the stock at $11.37. Which is like $3 below where it's trading at. Gives you a 68% probability of success, and you have a high return on capital, which means you're getting paid quite a bit for the money you're having to put up. You're getting paid almost 50% right here, max profit, for money you have to put up in the trade. So you go ahead, you click confirm and send, and then send. And right now the markets are not open, so again, it won't do it. Okay, so next stock here is we're going to take a look at Apple, and right now I want to promote Tim Knight because he's an awesome chartist. You should check him out on Tasty Trade at 3 p.m. Standard Time, 2 o'clock Chicago time for your guys' info, FYI. So next stock is Apple. Apple had a good earnings report. So for a while we were bearish, and this was great rangy action for traders. But looking in here, you know what? I think I want to So stocks. We're going to strength. We're hitting the top of the range. I bring out the drawing tools. If I bring out the drawing tool, do a price level. Look where we are. We're right in this little interesting falling area. Maybe we can get some sort of top out. I don't know, but hopefully we can get something. So we'll take a look at bearish options trade in Apple. Alright, Apple. So again, Apple's a $462 stock, so it might make more sense to do mini options, which are only worth 10 shares. So again, these mini options are super wide. So maybe they're really wide, but again, it's worth a lot less. So it says $246, but you can get a move like that in Apple pretty easily. So you set this $5 235 credit, which means your max loss is $26.50 and your max profit is $23.50 because these only represent 100 shares. And that means, what this means is you can get really wide. You can get really wide in these options. Now again, these options are way less liquid, but you can get wide. So I'm going to go 8.5, $20 wide. 48 max loss, 158. So okay, that's not 151. So that's not enough for me. So it doesn't make sense to go $20 wide. Alright, so since the minis don't make as much sense, we just go and take a quick look at these options. And then we're probably going to do this. Alright, so I'm looking $5 wide, Apple, short call red. So 475, 480, 147 credit, your max loss is wrapped around 350. Oh, these are mini options. Alright, so you can do this, but it's not going to cover commissions. So you do 2, you can do 2 or 3 or whatever, but it doesn't make sense to do that. So we take a look here, and I'll change this to 14 strikes. We take a quick look right here. Alright, let's see what we can get on the sell vertical. And 177, so your max loss is around 123, 323-ish. High probability of success around one quarter of the width of the strike, so it makes decent sense to sell call spread. If Apple goes down, you get paid, but you need Apple to stay below 471.77 and you can make money by expiration. So again, that's an interesting and lucrative trade you could do. Next stock is going to be the QQQ. Alright, so again, people, you can't short this, but for me it just makes sense to short. Like, why not? Just take the risk. It's way up, it doesn't really make sense, it's way over inflated. So I'm just going to take the short risk. I don't mind. Okay, so I'm going to go trade, and I'm going to go QQQQ. Now, for me, this is really simple. This is really simple what to do here. Because Qs have such low implied volatility, 13% in this month, and if I were to go down to option statistics, 9th percentile, and 13.24% implied volatility. So IV just means compared to its range, it's in the 9th percentile of implied volatility, so implied volatility is super low. So let's take a look into this area. Alright. So what I'm going to do is, since we can't really sell a call spread because that's selling volatility, we just buy a vertical put spread. And you can get as many of these as you want. Just understand it's $76 stock, so $7,600 in risk. 40% debit, that gives you a 41% probability of profit, but again, you can make $59 and just take the risk. It's a quick shot. You can make $59, lose $41, and you need the stock to go below $76.59 until you make money, which I guess is decent. So you just buy the put spread. If you want to get wider, you can buy something more in the money, which is what I am tempted to do. You can get it for 93 cents, which gives you around the same probability of profit, but more risk, etc., etc. So you could do that, and you just need the stock to go below 77.07, which is pretty decent. And you would be making money here by expiration. So you may want to take a look into a bearish position in the Qs. Then a few more things. UNG has been crushed. This is a chart of natural gas, and we can actually go to the futures chart. And I think I'm going to stay on this. But natural gas is way down. You can see, I guess this area is down. So we can take a look, not in actual natural gas, because it doesn't make sense because of the options on futures, too wide, not very liquid, etc., etc. So we just take a look in here. What can we do in actual UNG? Alright, so since I'm bullish in UNG, I want to sell a put spread or sell a put. Alright, so I can't really sell put because the return on capital doesn't make sense for the risk you have to put up, how much you're going to get paid. So it doesn't make any sense to sell a put. So then you can either buy a call spread or sell a put spread. So here you can sell a put spread for 29 cents, giving you $71 max loss, $29 max profit. That doesn't make much sense to me either. You can't do that. So what you have to do, if you're bullish in UNG, because the implied volatility is so low, only 34 percentile, you can buy a put spread. Alright, so you have 53 cent debit, so your max loss is $53. Your max profit's $47. You can go wider if you wish. You have a 53% probability of success because that's your max loss, and you make money if the stock stays above 17.53. So it needs to fall an additional 19 cents for you to lose money in it at expiration. So one last stock to look at is SLV. SLV is silver. Silver is, it's just as the metal, silver. So what I did is there's a couple things you can do. You can sell a put, but again, it doesn't make much sense to return capital. You can do a covered call or you can do a vertical spread. Now, since I'm really talking about what I've done or what I'm doing, I decided on the covered call because it made most sense. They actually talked about this trade on Tasty Trade today, on Good Trade, Bad Trade, where they go through some of the trades. And don't worry, you're going to want to route this trade at the open because of the bid-ask differential, but you're going to make money if the stock stays above 1865 by expiration. If it goes nowhere, stays around or above 1865, or if it goes up, you'll make money. And that's an interesting trade you can do. It only ties up $900 in capital. So max loss 186.5, max 135, high probability of success comparatively speaking. So you could do that. So that's gonna wrap up the segment today. I hope you enjoy the show. Thank you for listening. My name is Alex. I'm a 12-year-old trader, and I've been trading for 3 years. Hope you enjoy the show, and if you missed part of the show, you can definitely watch the interview in this segment in the archives. Thank you.